Hi, good morning. I'm Dan Noone. I'm the CEO of G2 Goldfields. We trade on the Toronto Stock Exchange under the symbol GTWO and on the OTCQX under the symbol GUYGF. We have a gold project in Guyana. It is a high-grade gold system in central Guyana. We have put out an MRE recently in April this year, comprised of, there's two deposits, the Oko Main Zone, which is 1.2 million ounces at about 9 grams a tonne, and the Ghanie Zone, or Ghanie Deposit, just to the south, which currently stands at 800,000 ounces at about 2 grams a tonne. We're currently drilling at Ghanie, expanding that resource, as we showed in our recent release, and we've also made another discovery at Oko Northwest, 2.5 kilometres to the northwest of Oko, where we've currently have about 50 holes into that, where we've discovered another high-grade system out there. So it's good to be back, Melbourne.
Good to see you again, Daniel. Now, we've spoken many times before. I think occasionally it's kind of quite useful just to kind of get a recap of what you've been up to and how you've got to where you are now. So you've just put out the MRE, or a few months ago, the maiden mineral resource. Sorry, not the maiden, but a mineral resource estimate with about 2 million ounces, kind of in a global total. Could you just tell me how long did it take you to get there? The 2 million ounces. How long have you been working on this project? And the market capitalization of the company, and therefore kind of this very crude estimate of what you're worth on a resource ounce.
Okay, so we started in 2019 in November. I think we released the discovery November 23, 2019. And so it's been 3 years of drilling that went into that MRE. The first one came out a year before that, which was the original at the Oko Main Zone, which was 1.2 million ounces at 9 grams. So that came within about 18 months, and then another 18 months of drilling, and we, with the Ghanie discovery, we added another 800,000 ounces there. So it's been a process. We discovered it with the first hole. Ghanie took a little bit more thinking. We probably had about 15 holes into that before we got to that stage where we understood it, and now we have the discovery at Oko Northwest. We have 20 kilometres of strike in the district, so we've been drilling at Tracy, that's a new star, and then we'll get up to the Yaramu historic mine within about next 2 months. And that's the original mine in the district where they mine 9,000 ounces at 15 grams a tonne between 1907 and 1910.
So that was 100 years ago, over 100 years ago.
Yeah, the discovery was 150 years ago in the 1770s gold rush, this area as an alluvial field. So we're the first people to drill at Oko, but it's certainly been known as a gold district for a long time.
When you started in 2019, what was your market capitalization and your share price?
Okay, the market capitalization was about $4 million at the time. Share price was 10 cents. So that was right at the start. We obviously made that discovery early. Post that, we've raised about probably another nearly $50 million, of which we've still got about 16 million left. So we've spent about $35 million to date. Like I say, we have 2 million ounces in resource, and we have a market capitalisation now of about 280 million Canadian, nearly 300 million Canadian.
It's interesting, isn't it? Because I mean that's and your share price is?
Our share price is $1.40.
$1.40. So 14 times over 5 years. That's a good result. In a sense, that's the risk reward ratio that happens when things work out. That initial investor coming in at was it 10 cents?
10 cents.
There was quite a lot of risk associated with that.
Absolutely, and the big risk there is the timelines. You never really know how long this is going to take. So it's a high risk, high reward scenario at the start. As we move forward, obviously, that risk comes down and the potential reward comes off as well. Although we still think there's a fair bit of reward to get yet, but the 14 times comes from the initial investors who know the country, know the people, are comfortable to invest in this space. So it's and they're the hard days. There's no doubt about that. We put our own money in. We've invested $6 million ourselves into the company, and insiders still control 27% of the stock for that reason.
I saw a very interesting graphic recently. I think it was on the back of the Snowline Gold, resource and then the subsequent kind of analysis of what the average enterprise ounce is, or the kind of the EV per ounce in the gold resources space. And there's, with a lot of data, with AI now, you can kind of compile that data. And the explorers and the developers, the average grade was, the average value was around $27 per ounce. But things like Snowline Gold would kind of would attract a premium because they're deemed to be these kind of higher quality assets, trading at around $80 an ounce or $84 an ounce in their case. Where does G2 Goldfields sit in terms of its valuation on a per ounce basis?
Well, per ounce in an MRE is getting up around $135, $140, which I think reflects the belief that there's a lot more ounces there. So, and I suppose also the quality of the ounces. At Oko, in Shear 5, there's a zone there which goes strike of about 150 metres and the plunge of about 400, which averages, I think it's 3.2 metres going an ounce. So, I mean, there's these beautiful high-grade zones within the deposit near surface, which will make a lot of money. So I suppose once people start to delve into what's the actual value of those ounces, not all ounces are equal. So people will say we get paid fairly well for our ounces. I would say that's a function of the quality of the ounces and also the belief that there's a lot more ounces out there to be found near surface and in the near term. And
to that, your most recent headline, I mean, presumably that's kind of going to be a talking point today. You published 10 meters at 9.7 grams gold and 52 meters at 2 grams gold, but they were outside of the existing resource. Can you put those results in context for me?
Okay, so they're in the Ghanie Zone. So the Ghanie Zone is just to the south of Oko Main Zone. It's 1.25 kilometres long. We made the discovery there about probably 18 months ago. What it is it's the continuation of the main Oko Shear, but unlike the Oko Main Zone, which is hosted purely in the carbonaceous shales and quartz phase, the geology here is now oblique to the shearing. So we cut across different lithologies, and that lithology changes the style of deposition, the grade and the thickness of the deposit. So as we go down, at surface there was gaps in good grade. So we had Ghanie South, Ghanie Central, Ghanie North, and we started drilling down what we thought was plunge of that, which was 60 degrees, which is really the plunge of the folding of the lithologies, whereas the high grade is actually 45 degrees. So we were drilling down, we thought the bodies were at 60. They're really, the lithologies plunge at 60 degrees, but the high grade cuts across all those lithologies. So what we're seeing here at the 10 and 9.7 was tracing the high grade in what was Ghanie Central further to the north, and so we were seeing that continue. And so this Ghanie Central concept is really, and Ghanie North, Ghanie South doesn't exist. It's just Ghanie. It's a one long shear zone with which is a primary control on location of mineralisation. You've got a 45 degrees pitch of lineation along that shear, which controls the high grade input, and then you've got lithologies which change and they dictate the size or the width and the grade. So when you're in the carbonaceous sediments with quartz veining, it's narrower. You get things like in Ghanie South where we had 11 metres, 37 grams. Then you come into the magnetite-rich metamorphics, which are more brittle, lots of iron for dropping out the gold, highlighted sulfides, and then the gold. So you get these broader zones of about like 2 gram material. So this variation as you go along strike, you also get as you go down dip, because it's not just a simple one folding exercise here with the lithologies. It's been folded 3 times. So you get this mosaic of higher grade, different thicknesses and grades as you go along and down. That's one continuous long system controlled by that main Oko shear.
I haven't got all 3 deformation phases of folding in my head remotely, but can I? Is it fair to say that that shear zone, that main shear zone, that's the primary locus of the mineralization? So most of the mineralization is associated on that plane.
Exactly, that is exactly it, Merlin. And interestingly, in hole 120, we had 2 zones. I think one was 13 metres at 2.9 grams, the other was like 12 metres at 3. And so we actually have the parallel Ghanie East Shear, which we got a bit excited about last year further to the north, adjacent to the Oko Main Zone. And actually we trace that down. You see a bunch of old pits and workings along that trend. And so we're starting to see that come up with decent thicknesses and grades adjacent to the Ghanie structure. So we now have two parallel shears out there, which makes it rather interesting as well.
Okay, so you've got these two parallel shears. I'll just focus on kind of one as the kind of the dominant mineralizing plane, and then the distribution of whether that is 2 meters thick or 52 meters thick will depend on various kind of structural perturbations along the plane, and also which bit of lithology it's crossing, which is not parallel with the plane, but it's kind of at a sub-angle to that. Am I correct?
That is exactly right, Merles. Yep.
So you've got a complex interplay of various factors. You've got the kind of structural variations along trend. You've got the lithological variety of, and how the fluids interact with what kind of lithology that it's kind of currently going through determines whether it's 11 meters at 5 grams or 8 meters at 1 gram or 52 meters at 2 grams, or whatever. It's a key factor is the chemistry and the rheology, the way that the physical characteristics of the bit of rock you're going through.
Exactly, and then the key takeaway for us at the moment is that system's continuous. So it's not a series of pods along this shear; it's a continuous system, which means, when you're looking at it in a mining scenario, you say, okay, that pit's going to go the whole length of it. And then when you go underground, that footwall zone is always there. It averages 4 meters at 10 grams. So that's going to be always there as well. Now you will get broader zones and higher grade zones, and you'll get low grade zones which are only just above cutoff, but it's a continuous system. So for the resource calculation, which has to be functionally of economic rock, that's a huge change. And then the economics of mining something which is a continuous body is different as well. So for us, that's a great de-risking factor for us in our own minds about just keep drilling and it's all good. So now at the moment, Ghanie just plaster it with drill holes, not so dissimilar to what our neighbours did south of the border, and then you add ounces very quickly. So that for us, it's we've got there.
Okay, so let's now come to this word continuity. Along the Ghanie Shear, to the north you've got your own resource, which is Oko Main Zone, and to the south you've got the border and your neighbours. And does their resource does it line up and kind of abut the concession boundary?
Yes. So they have a bit of a blank spot. They've drilled it. It's just lower grade, right on that border zone. Probably about 50, 100 metres. It's probably in sandstones or siltstones, which isn't a great host. But then they get down into those magnetite-rich volcanics to the south, and it's quite a coherent long zone. But you still see those plunging high-grade shoots in their long sections, which we understand what they are. That's the mineralisation control coming up that. So, very similar system. Not as much quartz veining down there. More sulfides. We see that as we get south in Ghanie as well, it's more sulfide rich, and that phase is post the original high-grade visible gold that we see in the quartz vein. So there's actually two phases of mineralisation that we see certainly at Ghanie, and I think they probably have down in Block 4 as well.
And I know one never wants to speak too much about other companies, but you're still in the kind of the grow the envelope, define the resources stage of the work, and you've got another 15, 16 kilometres of strike on which to work, and so that envelope is growing. Is it fair to say that they are more focused on advancing what they've got and taking that up through the de-risking phases towards a kind of commercial production decision?
Well, that seems to be the case. They were going to do an MRV, but now they've obviously got into this takeover by G Mining, who are obviously a mining company, right? They've sort of drilled along their 6 kilometres of strike that they have, and they've found what they've got. They took it down to 1 kilometre in Block 4. So I think they're at the phase now where it's like, okay, they've done all the exploration drilling to date. Let's get on with driving this forward to a mine build. And then I think that's where their mindset is, and I think it's where G Mining's mindset is. And we'll see if that all comes together on July 9th.
Is there any potential obstacle to that?
Well, it was there was, when they put their circular out, there was another offer at 72 cents from a third party. No one knows who that is. There's plenty of speculation, but we don't know. So we'll see. I mean, you never, many a slip between cup and lip, but it looks like it'll go through, but you never know if someone else wants to come in and join the party.
The steady filing shows that Anglo is still buying stock.
Yeah, in us for sure. Yeah, basically when we did the placement with Anglo in January, they took 11.8% at a 35% premium. It was 90 cents at the time. There's no cap on them buying stock. We're comfortable them buying in the market. They can get to 19.9 like anybody else before they'd have to make a takeover. We're comfortable with that. We've got like I said, 27% held by insiders, so they don't have a control block. It's always good to have someone buying your stock.
It certainly is. I always thought that on the TSX they didn't have to file. I thought that if you weren't an insider, maybe they're insiders.
Technically, once you're above 10%, they're an insider. So that's why they file SEDI filings. So it's there for everybody to see. I mean, they're obviously.
I thought you weren't an insider until you were over 20%, but maybe it's. I was under the impression that on the TSX you could. If you had if you were over 20%, you didn't have to file under 20%. When you were over, you had to file every time you crossed a 2% ownership variance boundary, either 2% down or 2% up.
Yeah, I think that's above 20%. Certainly above 10, you have to just file all your acquisitions and dispositions. So that's the threshold of the 10%.
Interesting, good. Let's. I will come back to the kind of the work program. Can we just touch now on the kind of the gold price and the gold market and kind of what you've seen, because there was a flush of euphoria at the start of when we did our last interview, which is at the start of the PDAC at the beginning of March, and the gold sector rallied, but it's kind of feels as if it's kind of run out of steam. It's a slightly flat atmosphere out there, but perhaps I'm just not looking in the right places.
No, I think you're right. I mean, a lot of people are seeing a disconnect between the gold price, which hanging in there very well above 2,300. It tested it a couple of times the other day. It tested it again, but it seems to be the base. There's buying by central banks. I don't think you've really seen the generalist funds come to the table yet. Although I will say that we've had a lot of more meetings with generalist funds, and you hear about this concept, but the gold funds themselves still aren't getting inflows. So we're not seeing the money coming in there. So it's interesting. The North Americans, I think, are starting to come around to the idea that this is a genuine gold price as opposed to something which will just come and go. I think the Europeans were probably there earlier, probably a few months ago. They really believed that we're on a bull gold run. But certainly North America and the stocks have not responded at all to this gold run.
I've been doing some marketing in London on copper stuff, and quite a lot of the funds I speak to, they've got huge amounts of money under management, and they say to me, we don't have the ability or the expertise or the time to focus on the granularity of an explorer. That how do we know what this explorer is up to or that explorer? How do we non-geologists, fund managers, manage that technical risk of looking at a company where we can't really analyze the numbers in terms of kind of costs and trends and things like that. They say we have to make the big calls on whether we go into a coal company or into a diversified company. Are we buying iron ore? Or are we buying the kind of the big gold mining companies? Well, who are your this is such a specific case here. It's a discovery. It's the early stage. Who are your target kind of institutional investors that you're looking for? Well,
historically it was the gold funds, which they're full now. They really aren't buying in the market. So it's family offices, high net worth individuals, and you sort of need to find them at specific conferences which are held for those types of investors. And it's really a one-by-one investor almost at the moment, which is it's hard work. Historically, it's always been hard work, but once you get big enough and institutions can buy you, we'll get easier. And we do have institutional holdings now. But seriously, I think the money that's going to come in next is the high net worth and family offices. A lot of money has gone to family offices, which probably used to go to the funds. And so you really need to find that network and get into that.
But again, the family office is not necessarily going to have a dedicated mining analyst.
That's correct. So you do have to find the family offices who have a history in the mining sector. Yeah, it has got a lot harder, there's no doubt about that. And the other thing is the smaller brokerage firms are sort of almost disappeared in Canada here, and it's just the big banks who, like the big funds, are only interested in the big assets. So there is a real dearth of research and understanding of exploration. It's always sort of darkest before the dawn to a degree, and that's where the opportunity comes. But I'm not sure exactly how this plays out in relation to research and the money that wants that risk and reward, finding the investments that they require.
Well, the good news is that with your market capitalization at almost $300 million Canadian, let's call it 240 US or 220 US, you're effectively you're micro cap now. You know, you've in the eyes of the institutions, you've made it up to the stage of the micro cap. Perfect for the special situation funds. So how do we get you from the micro cap to the small cap to then to the mid cap through growth? I'm joking slightly, but there's an element of truth to this. It's about finding the next step of growth, and that comes back to the drill program and the work program and the way that you're going to be tackling your trend. So could you just talk to me a little bit about your kind of catalysts and the way that you're planning out what you'd like to do over the next 12 months with your complex asset base, but just in a way that you can present it to an institution and say, this is what we're going to do?
Okay, so first up, the first easy thing, we're drilling out Ghanie. So we'll be drilling that down to 500 metres all the way along strike with the idea that we can have all that drilling done by Christmas break, so that we have an updated MRE out in January next year. So that would include the drilling at Ghanie, which we now are fairly comfortable that we should at least double the size there, if not more. And then the discovery at Oko Northwest, we're starting to understand that now up to hole about 50. We have the target area number 1, which is about 800 to 900 metres long. Within that, we've got 6 zones of higher grade, which is plunging to the east. So we're starting to understand the geology there and be able to target that. We think, we will be able to get a resource out of that, which comes into the next MRE as well, which is good. So that's really...
Sorry, is that also at the same time? Kind of, might you get a resource in Q1 or Q4?
Q1. We always try to say Q4, but in reality, we always drill up to Christmas, wait for the assay, and it's always Q1, so we'll be realistic this year. And then... So that's really the build the ounces story, right? Then there's the discoveries as well. So that main shear which comes up from Block 4, Ghanie, Oko Main Zone, we had Brett Davis out. We discussed this last time. It's a through-going structure, and so as we get north of the Oko Main Zone, there is the Oko North Pit, the old one, and then we get up to Birdcage, which is covered in tailings from the era of artisanal mining in the 2000s. So we are starting to drill that. And it's a bit blind because it's covered by tailings, but we believe that main shear goes through there. We think that's a really high potential for discovery there. But also out along the trend from Oko Northwest up to Aramu Mine, through Tracy and up to Aramu, we're exploring up there. We'll be drilling as well. So that's the discovery. And when you talk about how do you get that quantum leap in a share price or value, that is discovery. Okay, we add ounces incrementally. Value incrementally by adding more ounces, but that new discovery is what will take us to the next stage. Beyond that, we're also working on picking up new lands in adjacent areas. So we're always looking for good projects. We've been in Guyana for the last, Patrick, 30 years. I've been down there nearly 20. It's always lots of potential in Guyana, and as long as you can put those deals together within that same region, we're happy to do that. And then obviously we've also got the Peters mine. But the idea is that over the next 12 months, and hopefully by the end of this year, we'll spin out the non-core assets into a company called G3, for lack of imagination, and that will move ahead with more of that grassroots style exploration where no one really cares that much, I suppose, but we get on with that and get focused on the next discovery outside of the Oko to Aramu trend.
Yeah, just your kind of mention of Guyana and kind of some of the cricket's being hosted down there. I don't know if you've...
Well, I think England played in a semi-final last night. It didn't work out that well. But...
it didn't work out so well. But it's interesting that Guyana was kind of included into the World Cup in the States. I mean, it's a World Cup cricket tournament in the States and in the West Indies, and then I suddenly saw Guyana popping up.
Guyana is part of the West Indies, and there's an old saying from in the Caribbean, because they're part of CARICOM. So there's an old saying from the Brazilians who say the Guianas, the three of them, stand with their backs to South America. So they're part of CARICOM, that's their political bloc, and they generally trade more with the Caribbean, but they are definitely South American. So it's an interesting one.
Quite often, when I'm talking about G2 Goldfields, the question I get, or the comment I get is, the question I get is, oh, but they're not the first movers in the region. The Reunion are going to build a plant first, or surely there won't be a second plant built in the area. So I just wondered what you think about that. And you've also spoken in the past about a small plant to process high grade versus a big plant to kind of swallow everything.
Yeah, I mean, that's the way you go. You just decide that you're going to build a mine or not, whether you build it in phases, whether you go after the high grade first to get cash flow to build the rest of it. And it depends on your cost of capital. Now, when will the first ounces come out of this Oko region? I'd say probably 27, 28, as early as it gets. So I think there'll be a lot of discussions when it settles down who actually is the owner of the of Block 4. I mean, obviously Reunion is up for sale. They've had at least 2 bids. It's definitely going to transact. When that happens, we'll certainly be talking to our neighbours about whether there's something we can do there or not. Because in reality, building 2 plants and 2 sets of infrastructure, you'd think would not be as economic as building one. So there should be a value to be extracted for all shareholders on both sides of the fence by putting it together or doing some kind of deal. And then obviously, that is a natural pathway. There's no doubt about that.
But I mean, playing devil's advocate, isn't it surely the kind of why would someone want to talk to you now? Because if they've got 10 years of mine life and they've got the kind of economics, why don't they get going and leave you to stew your own juices for a bit?
Well, I suppose we can say the same thing. We can build our own mine, and we've got all the high grade and all the upside. So, there's 2 sides to every coin. They certainly rushed headlong into it. I mean, they've still got to do their detail engineering. They've still got to, they're probably a bit land constrained down there. Like I said, there's a lot of advantages in putting a whole district together, because again, for shareholders, at the end of the day, if you do put the whole district together and you've got, a mine which runs all the way from the south of Block 4 to Oko Main Zone, that's like 4.7 kilometres of open pit and, probably 3 undergrounds, you can get a lot of ounces out in the year. And all of a sudden becomes a tier 1 asset. Our friend Mark Bristow says there's only 14 of them in the world. Well, together combined, certainly the Reunion block and our block is one of those. So then there is a value to that. So, I mean, it's really a matter of sitting down with sane, rational people and then having a discussion. And using those words, sane and rational, in the mining industry sometimes is an oxymoron, but I think here it would be rational. So I don't see that you'd build 2 mines out here. But that obviously will play out. There's obviously players like Anglo Gold who would like to see themselves owning the whole district, and we never know who else comes along. But, eventually this is going to be a very big mine, and there's a whole 20 kilometres of strike length out here which is untested, which will add a lot more to it. So it will be a big district. It will go on for a long time, and I think there'll be one operator out here in the long term. When
you hear Mark Bristow talking about those tier 1 mines, what kind of ounce production do you think he's talking about? 300,000, half a million ounces? His
thing is that it has to be 5 million ounces and it has to be able to do 500,000 ounces a year. And certainly I don't think either of us is there at Reunion or us. And that's not just a factor of the number of ounces, but how many ounces you can get at a year. And so that's a key. And that's why these greenstone deposits are good, because you tend to find a series of deposits along strike, which you then can mine simultaneously and get that through a central mill. And that is the beauty of the system. So, it's certainly, as a combined entity, is very attractive.
And so obviously you've got a much greater chance of hitting that threshold on a sustained basis if you put yourselves together.
Oh, absolutely. Right. And so, like I say, if you're looking at it in a rational, sane manner, that's what will happen.
Well, Dan, we better leave it there. We've been talking for about half an hour. It's been fascinating as ever. Thank you very much, and good luck with the drilling. Keep going, and I look forward to the next resource and probably some results in between.
Okay, excellent. Thank you very much, Mel.